let's say I was a founder of a startup and I really wanted to get VC funding. How can I do it through you? Like, what would be the first step I need to do? What I need to do?
Okay, so I first of all go through the pitch deck, and honestly, I don't see any perfect pitch deck till now. And yesterday only, I was talking to another investor, and I was like, "How do I make sure that the pitch you get is perfect, or like you don't just throw it out, or how do I know that this pitch deck is perfect for you?" And they say like, you cannot assume anything based completely on a pitch because the majority of the founders don't know how to create it. So half of the time, if we throw away those pitch decks and assume that they are not fit because they don't align with what we are expecting, then they might miss an opportunity. So I don't try to like just end things if I see a pitch deck and it doesn't fit any of my knowledge or criteria. I will still get on a call with the founder. Try to make sure that I can get more information, like okay, valuation, because which is insane. I would like I have no idea. I mean, like I can talk about this valuation thing for so long. This insane amount of high valuation and high raise asking. They're asking for high amount, but the traction is almost nowhere or nothing. So that's like a big red flag, I would say. There is that the gap is so big. So when we talk to founder, this will be the first thing to understand how much, why they're raising, how much they're raising, and all sort of things. Plus, I would like to know about the founder. Are they expertise in their field or not? There's very less chances where a founder is not expert in its field and they are thriving and building a really good product. So you have to be like a good person in building whatever you are building. You have to have like expertise in it. And then I like do a little bit of more of due diligence on the traction side, how it is performing and not. And then when I see that industry, which industry it is, I kind of like assign it to or like give it to a particular investor. Like then they jump on a call with them if they are interested. They from there move forward with that. For me, it's like I just look at the pitch deck, connect with the founder, talk with them, just like to get to know them and what they're asking, what their industry is, what they're trying to build, a little bit more information. And then I feel like if it's good, if they can have a chance of, entire part of my job is what I believe is to understand whether this company can be funded or not, which is kind of tricky. And on the same time, it can give a lot of information about the product and the company. And that's what investors are actually looking for also, that they kind of reduce a little bit of their work. You can just do a little bit of research on your own, and then they go, that this company is what we want to talk to. So yeah, this is like a small part of what I go every day to talk to a founder and then source it to the investor.
That's like a lot of work. You're like a detective.
I have like an entire Notion page, and I go through systems. Like I have like an entire build system for almost everything I work in. So now it's like getting easier. Before it was like everywhere. I had to like emails or Slack group or whatnot. Like LinkedIn also started getting me some sort of reach out. So yeah, it's just crazy, but yeah, it's fun.
I'd love to drill in. Like you said, some really cool things, like really interesting things there. I'd love to drill into a little bit in the traction bit. It's like just interesting that you're saying, yeah, they're asking for real high valuations, like for funding, but then there's zero traction. That performance piece. What is it specifically that kind of determines traction? Like signups. Is it retention, people hanging around? What is it that you're looking at in there? Is there a sort of suite of metrics or one key thing?
Yeah, it's not just one key thing, but there are so many things to determine based on what the company. So suppose it's like a subscription-based company, then there's absolutely no chance to look if there's no MRR, like monthly recurring revenue. If there's nothing like that, then I feel like they need to do a little bit more. They should like push towards into bootstrapping rather than asking for funding. So definitely there's like a high valuation even when you don't have a good traction. Traction is not simply based on like if you have like 1,000 subscribers or like signups that which is free, then and you don't have any paid in a subscription based business model, then how would you determine that those customers, that those signups are really building your company and they are like powerful to like transform it? So if you don't have that, then why are you even asking for such a big valuation, or $1 million at a very high valuation? So I don't think so that works. It has to be few sort of monthly revenue coming out, or it can be like if it's like a contract base, then you can also show that there is 1 year long contract or like 2 year long contract which is like signed, but it's yet to be paid, or like it will be paid in a monthly basis. So it has to be some sort of revenue format. If it's not, then it's very likely that the investor will overlook it, or let's just like let it go for now. And it's definitely not number of free signups or likes or how much hype you're getting on the social media, because that's it can be very tricky. Like a month you get a good press and you get like around 8,000 views, but it doesn't convert. And also one more thing, this side of the traction, then there's another side is like how much churn is there, how much burn is there every month. If it's also high and you don't have any revenue coming in, then again that raises a lot of questions around what you're building. Either it is actually needed or not. If the customers are not needing the product right now, they will not need it tomorrow.
Yeah,
it's something like that also.
It's like it's a key indicator. Like, is someone willing to hand over some money and hang around? It's like, are you actually solving a real problem that people are willing to pay for? And that thing of like getting signups, it's so easy to kind of create a bit of hype, right? You just product hunt, and there's lots of other founders that are all really keen to support each other, which is amazing. But then it's like,
then you have a wait list of like other founders who need to do with you. If you went to an incubator or somewhere and everybody signed up to wait list, but none of them is your actual ICP.
Yeah, so it's really fascinating. Your advice is like bootstrap, really. Get, that being your goal, get some revenue coming in, like prove that what you're doing has legs, really.
And yes, it's like customers needs to, whether it is actually needed, whether it's actually solving some sort of problem, and you can see it when the customers are engaging in some sort of way. It cannot be like in one said statement. There are many other ways we can track if there is a good traction in a company or not, but it's not specifically only based on like signups. Especially that's a vanity metrics, and that should be gone. I would say that should be just completely gone.